Last month, Barry Sternlicht Starwood Capital agreed to sell New York's luxury Baccarat Hotel to a Chinese insurance company. And in October, Beijing's Anbang, which is another insurer, agreed to pay nearly $2 billion for the Waldorf Astoria on Park Avenue. But as Chinese buyers accelerate real estate investments in global gateway cities like New York, what economic threats are lurking ahead? Well, joining us now is Joe Sitt. He's the founder and CEO of Thor Equities, a global real estate development company which boasts a portfolio valued at more than $5 billion. So, Joe, I want to first get your take on the Chinese, who seem to be suddenly have a thirsty appetite for U.S. real estate. What's going on?
I think it's a reflection of people's concerns about the emerging markets and their relative stability compared to developed markets. And I don't.
In other words, they're scared of their own homes.
Yes, and it's everywhere. It's Brazil, it's Mexico, it's Venezuela, it's Russia, Ukraine, the Middle East. But I think the biggest dollar spender today and the biggest run of money is really what's leaving China, what you just said. It's everything from medium net worth individuals to super high net worth individuals. You know, they're a little bit afraid. Does the Chinese system and their whole Politburo and their governmental organization, does it really last? Do things change? Does the corruption scandal turn on them Sunday?
Rather than game that out, they're just going to come here. In the meantime, though, Joe, you are here. You've made money here, but you're also armed with a stronger dollar. So are you going over there?
You know, you would think that I would. I still very, very bullish on more developed markets like the United States, believe it or not. I'm still afraid of markets like Brazil and markets like China. I mean, there will come a time where I'll feel like there's a bottom in a place like Brazil, and we will enter back markets like that. But more particularly, what we've been doing of late is shifting in terms of not just managing wealth for institutions, but we've actually been dealing with a lot of wealthy people from around the world that have come to us and have been partnering with us in buying.
They say, we want to buy.
We want to buy New York. We want to buy San Francisco, Chicago, Miami. We want that safety. So more.
And you bought in Montreal recently, too,
yes,
right?
Yes. Okay. Now, that one is an example of a dollar buy going the other way. We see a Canadian dollar weak, strong U.S. dollar, but it's still a safe country. You know, while the economy in Canada has been beaten up based upon the lowering of oil prices and so much of that shale reserve that they thought would have greater export and exit value, so they're getting beat up. But from a political point of view, it's still a very safe, stable political environment right on the United States' border. So it's an example, to my mind, still of an opportunity flight to quality combined with utilizing the strength of the U.S. dollar.
And Joe, what about this news out that Macerich is rejecting Simon property? I mean, give me your take. Give me the Joe Sitt take.
I think all these big buys that you see, whether it's Cushman in the brokerage side of real estate, whether it's Blackstone buying the Sears Tower, whether or not it's the play by Simon for Macerich portfolio, is, again, examples of a thirst for quality real estate companies. In the case of Cushman & Wakefield, the management's fabulous. It's run by a CEO named Ed Forrest, extremely astute guy. And Sears Tower, Macerich luxury portfolio of the best malls in the United States of America. Who wouldn't want to own them today?
All right, Joe, great to see you this morning. Thank you so much, Joe Sitt, the CEO of Thor Equities.